So now that all the mega caps have reported and it has been nothing short of extraordinary, the focus is now turning to small caps. If mega caps trade like penny stocks, what will small caps do? I mean, seriously, if Facebook falls 25% on a miss, does a small cap fall 40%, 50%, or more if they miss? Well, I will answer that question today and give you the exact playbook I am deploying to deal with this. However, do you need more cash to buy these stocks if they crash further? Do you know the actual valuation of the stock you are targeting so you can expend that cash? Well, the good news is the Valentine's Day sale to join the Market Insiders private group is live, where you get full and direct access to me, and you get access to 4 courses for free that teach you how to plan, do evaluation, build up that cash we were talking about, and you get to see my watch list with price targets, my buy and sell alerts. We got live weekly Q&As, exclusive videos, and a ton more, so check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. Hey, no problem if it's not for you. At least consider hitting the like button and subscribing, as those are both easy and free to do. So let's briefly sum up mega cap earnings. Basically, if you beat, you were going to the moon, and if you missed, you were cut down 25% in a matter of minutes. So basically, yes, penny stock movements and mega caps. So that must mean our beloved small caps are going to move like super penny stocks then, right? I mean, they just got to move super crazy. Well, possibly, but I think the chaos will actually be even more unpredictable. Let's look at Robinhood for an example. It was on its way to legit penny stock status. Then they had a terrible earnings call, and it's up 40% or so right now. And basically, other small caps have gone nowhere, and some have dipped hard. It basically makes no sense at all, and they're doing that. Now, I know everyone on YouTube is out there making predictions about everything these days, it seems, and click right up here for my video with my thoughts on that. But with all these predictions flying around, who is right? Who is wrong? Why is it this way in the first place? Why is everyone all over the place, and why is the market all over the place? Well, the answer is quite simple. Basically, nobody can predict the future, but some people clearly think they can because they got it right during a raging bull run where predicting price movements was much easier. And now that the market is volatile, they still feel the need to make predictions for whatever reason. I know I can make a case for a stock mooning, crashing, and kind of everything in between. And this is all just part of a volatile stock market. And by the way, the stock market is volatile from time to time if you didn't know it. I've been doing this for over 20 years, and volatility is how funds make money. So the market is going to be volatile a lot overall because of course those funds are going to make money. Now, I know you're already thinking this isn't helpful because you want to know what to do with these small cap earnings calls. Well, fair enough. Let me get a little deeper here. All of us, myself, all of you, and the YouTube community as a whole, we need to get it out of our heads right now that we can predict the market movements, market cycles, that we can time the market with any efficiency, and more specifically to this video, predict price movements around the earnings. Ask anyone in my group. Long before all this volatility even started, I would tell everyone I don't buy around earnings or even try to predict what will happen to a stock price movement on earnings. I don't do any of that because I know I cannot do it with any accuracy, there we go. But more importantly, a stock is never more manipulated and price movements make the least amount of sense around earning. This is true during calm times when the market is normal. This is obviously true during volatile times like now, and it has been true for the 2 decades plus that I've been doing this. This is true for large companies and even truer for smaller companies. They are never more unpredictable than around that time, and this is basically nothing new. This is how earnings go. Want a super recent example? Check out Jeremy's video he did after Corsair's earnings. Somebody sent that to me, basically where he pulled up a chart where earnings were released or just after they had released, and the stock ran up to like $21, almost $22 or so or something like that, and then cratered to like $18 in literally under a minute or so. It was just riding up and all of a sudden, boom. It was crazy. Yeah, that was pretty wild looking, but I've seen it many times before. It's not illegal, and honestly, it's not that unusual. But there is a way to deal with it, and there are 3 things I do to deal with earnings specifically. First, I acknowledge the fact and believe that I cannot time the market nor make short-term predictions including earnings. Elon himself could have called me and told me earnings will be a blowout, and it meant nothing the day after earnings. And for those of you that didn't track it or don't believe me, Tesla just had a great sensational earnings and traded down big afterwards. Having that information from Elon would have been completely useless. So without that information, my guess as to what will happen is even more useless, so I choose not to buy or sell before digesting the earnings call completely and putting in the work. Second, I know what the valuation is ahead of earnings, and most likely I have already bought before the earnings call ever happens. I'm not waiting on earnings to buy a great stock at a great price. Just like my first point, you are asking to get burned, and you will only be right 50% at best. And here, let me give you a couple of examples. I bought PayPal prior to earnings on that day retail dumped everything after all the YouTube drama because it was a great stock at a great price at $155. Wall Street got stupid after their earnings and beat it down harder, and after analyzing those earnings to make sure I didn't miss anything, I realized the market gave me a massive gift, so I happily bought a ton more shares. On that same day I bought PayPal, I also bought Amazon at $2,700 because it was a great stock at a great price despite all the fear at the time. Their earnings were not great either, but instead of getting beat down like PayPal, the stock had one of the biggest, if not the biggest, one-day market cap gains in the history of the stock market. If I had waited, I would have missed out on that. I cannot control the earnings nor the price movements before or after, but I can control when I buy and my plan, which leads me to my final point, and that is to be prepared and have a plan for everything. I bought Palantir twice on that same day retail sold out big along with Amazon and PayPal and others because who the heck can't buy Palantir at $11 or so per share? Sure, if Palantir misses, it may be below that price even after its latest run up, but I am prepared if Wall Street gets stupid again. If Wall Street beats it up, but after analyzing the earnings call, I don't see anything alarming, I have cash set aside already to add to that stock specifically and get even more shares at whatever price Wall Street wants to give me. If it doesn't happen, I'm good because I bought at a great price that I'm very happy with, and I'll just write it up from there. But I want to hear from you. What's your take on the earnings madness this quarter so far, and what is your plan for small caps if you're looking at those? I would love to hear what you think. So thanks for watching, and we'll see you in the next one.